Are we in for a second spring? And does the data support prices holding up through the end of the year? That's what we'll be covering and more in this week's report. As always, thanks for taking a few minutes to join us for our weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be taking you through this week's findings. So let's jump in. First up is new listings for the 4 counties we track, and you can see the holiday dip there, but it came back pretty strongly this past week. In fact, it was our highest new listing week of the year, which was really great to see. Going over to under contract activity, again, a holiday dip followed by one of our strongest weeks in several months. So right in line with the previous year's trends. Here's showing activity, and you can see the showing traffic is tracking much more like 2021 than 2022 at this point. This is supporting our belief that the second half of 2023 should be stronger than 2022 was. And another reminder that we are way off on available inventory, especially versus 2021. So that means demand is still very strong, 25% less inventory now versus 2021, but it's essentially generating the same amount of showing activity. A few of our agents have even referred to this past week as what felt like a second spring. So here's off-market activity. These are those listings that either canceled or expired without selling. A great forward-looking indicator. We watch this to see if there's any major changes here. And we did have another holiday dip followed by a pretty normal week, so not much to report on that front. Let's go over and look at balance in the marketplace. So this is our balance metric. 60% is considered normal balance in this chart. So staying pretty steady here for now for the past few months. Here we add in our off-market activity so we can get the full picture of inventory coming versus leaving the market and kind of the same trend there. We're going to back out here and look for our national view today. We're going to look at price reductions. And so why is that? Because price reductions are an excellent signal for us. They tell us in real time how much correction sellers are making to pricing, which indicates if a market's softening or not. We are at a very normal pre-COVID level, as you can see. Compare that to what was happening last year with interest rates going from historical lows to much higher like we are seeing today. It looks like nationally there's certainly price support for the rest of the year. So prices should hold up in the second half of the year nationally. And then let's take a look at that same picture for us locally and for price decrease activity. You can see right around that same 30% market. So a very normal level, which indicates our pricing locally is likely to hold up through the end of the year as well. So big learnings from this week. We are in part of July where we're seeing some really solid summer activity with some agents even coining it as a second spring this past week with lots of multiple offers and interest and demand and showing activity as we saw, and a really strong support for prices holding up through the remainder of 2023. So a lot of good signals out there. Thanks for joining us, and we'll see you again here next week.